All right, welcome back to another episode of Uncommon Wealth, where we explore the strategies, philosophies, and decisions behind building, protecting, and transferring wealth. Today's guest is someone many of you may already know. Justin Colby is a nationally recognized real estate investor, entrepreneur, speaker, coach, and the host of his own podcast called the Entrepreneur DNA podcast. Over the past 2 decades, he's built multiple successful businesses, completed hundreds of real estate transactions, coached thousands of investors, and become one of the most respected voices in the entrepreneurial space. But here's the thing. What really caught my attention isn't just the success. While there's a ton of that, it's the evolution, because eventually every entrepreneur reaches a point where the conversation shifts from how do I make more money to how do I keep it? How do I protect it? And how do I create freedom? And ultimately, how do I build something that lasts beyond me? Justin, welcome to the Uncommon Wealth podcast.
Thank you, brother. I really appreciate you having me.
Yeah, man. For people who may not know your story, take us back. What's the life like before the success?
Yeah, common but not uncommon. I had a very rough childhood. All my father, stepfather, and mother were all alcoholics. And so everyone has a story. I'm not here to say that and woe is me at all. And I just hope it empowers people to be able to do something well with themselves. And so was not a phenomenal student, but somehow grinded my way into going to UCLA and getting a degree from there. And then from there, I've never had a W-2 job. I graduated, got my diploma, went straight into building a door-to-door sales company. So that's something that really built my skill set. And then in 2006, 7, and 8, I started a real estate brokerage in California, which obviously, if anyone was in the space of real estate in 2008, you know what happened. I was definitely a statistic.
Not a good time.
Lost my house to foreclosure. The repo man took my car. I had the whole circus. And then I had to rebuild myself, right? I was an adult at that point. And so from there, I went into real estate investing. And since 2007, essentially, 2008, I've been able to do thousands of real estate investments. And today, what I focus heavily on is apartments. There's a massive gap in a huge hole from the people who thought they were good apartment syndicators. And so me and my partners actually are. And so we typically are buying banks at massive discount or buying apartments at massive discounts directly from the bank. So these are deals that no one sees. And so there's a lot to unpack there. I'll let you kind of ask some more questions, but the iterations of that give or take 23-year entrepreneurship has been plentiful.
Well, talking about the entrepreneurship, what experiences do you think shaped the DNA, that entrepreneurial DNA you talk about today?
Yeah. So the first is sometimes you don't even know you have it. So as a kid, I actually would ask my mom to take me to the baseball card shop. And I'm talking about like 7, 8 years old, and give me $20. I would buy a box of baseball cards. So back then you could buy a box of baseball cards for like $20. Okay. So if you're into that still, you know that is no longer the case. And I would open the box in front of the store owner. By the way, I had no idea what I was doing. And then the store owner would buy back the cards he wanted to sell at retail. He'd buy them wholesale from me. I would almost every time double my money. And I would come back probably 30 minutes later and give my mom her $20. And I would have $20 now to spend on candy and chocolate milk and whatever I was doing. I also would go around my neighborhood and pick up all the cans and bottles. Because back then, this is, 1987, we would get like 5 cents for a can and 10 cents for a bottle. And so I would come away every recycling day with like, 10 to 30 bucks. And so I was doing these things because I just wanted to be able to buy candy or chocolate milk when I wanted to. And I didn't really understand, like I was being a hustler. I was being entrepreneurial. And so you take that into my adult life. Like I said, I graduated UCLA with a diploma that, depending upon what you want to do, you could probably get a job pretty much anywhere back then, right? Because of just the strength of UCLA. Instead, I started a door-to-door business, sales, door-to-door, right? And I only got paid, my company only made money when we sold UPS or we sold Eagle First credit card processing or whatever. And so, the DNA really, a lot of times is not known you have this DNA until you start to look at the actions you're doing. What have you been up to? What do you do? And then like, what are you interested in? Like what intrigues you? Right. And you start to think about those type of things. And then lastly, I'll say about the DNA, you need to eat more poop sandwiches than anyone else. There's no other way around it, right? Is to just be able to endure the pain longer than anyone else, but also like that pain doesn't come typically with the W-2 job, right? That is the pain of putting the pressure on yourself and making the decisions yourself and the weight of that. And so if you're willing to do that, but also wanting a bigger life, more life, having control, having happiness and freedom because it's on your decision making, then I think you have to go be an entrepreneur.
That's funny, man. I think you and I had very similar business models as young men. You know, I had the baseball card business, I guess you would say, but you know, we would trade up, and then some guys would, you know, buy the cards, which I thought was always a cool thing. Definitely did the recycling component. Right. And then I also had the lawn mowing business where I would hook up my lawnmower to the back of the bike and ride around the neighborhood and see who needed their lawns cut. Did you ever do that one?
No, I got a little bit into the car washing thing.
Oh yeah.
And the only pain about that was sometimes people would have hoses or not. And I never was, I don't know, smart enough to like bring my own hose. So I'd go around door knock and I would have a power washing nozzle. That was all I would bring. And I said, I'll wash your car for $5. So back then you could do a $5. Most people would pay you, but some people didn't have hoses.
Man, how times have changed. My wife had someone come in, two young men had someone come and clean her car the other day. I'm like, how much did they charge you? And she said, $100.
Yep.
And I'm like, yeah, I think that's a good price.
I was just going to say, now my wife has these car cleaners come to the house and it's $100 per car.
Yeah.
I was
detailed. Yeah, detailed, but still. But what's crazy, she's like, do you think that was a good price? I'm like, yeah, I think that was a fair price. It's crazy how times have changed. Crazy. Do you think you started that entrepreneurship journey because you were born with it? Or do you think you did it because it was a necessity, because you knew you couldn't go to your parents as a source of money?
I think because of my childhood upbringing, I knew I didn't have money like that, right? Like I don't have the story where I was homeless and it's not that extreme. It was a tough childhood.
No, but your story's your story. Yeah.
Yeah. But I think because I didn't want to really engage my parents, frankly, because they're always drunk and just not nice. I think it was like I knew early on I had to go fend for myself. And if I wanted money for chocolate milk, let's say, then I got to go find a way to get it. And they didn't teach me any of this, right? This wasn't like a Grant Cardone that's teaching his kids how to be entrepreneurial. I just had common sense enough to realize, okay, well, if I need to go get money, then I got to go make money. So I think you're born with it, but I also think it comes out of the product of your environment to some extent, right? That's why that hustler mentality tends to come from a place where when people don't tend to have much money, I think it's an environmental scenario more than anything.
Was there a defining moment when you realized, I don't want a job. I'm an entrepreneur. I want ownership.
I think it was when all my family, after graduating college, my family was rather irritated that I did all this to go get this diploma. And then I just started going door to door sales. They were like, what the hell's wrong? And it just became this kind of nightly meeting of like, what are you doing? Are you sure? And why? And I got defensive. And that was kind of the moment I realized, like, I'm going to go do it my way. F off, right? Like, none of you have money that is aspirational by any sense. Most of you this is my family I'm talking to. Most of you are struggling. And I have people around me that like have real money and can help me and are willing to help me. And like, I'm going to do it my way. Right. Because whatever you guys did, that didn't work. Right. And a couple years after college, my mom passed. Right. She couldn't kick it. She couldn't get over the hump. And, so I was just always kind of motivated by like, I can achieve more. I can do more. I have skill set. And, whether you want to call it God or whatever, Like I just believed it. I didn't have to see it. Right. My friends weren't rich. I didn't have like that, like, oh, I saw my friends, they were rich, so I wanted it. I just believed I could go get more.
You know, I've seen some of those limiting beliefs in my family too. Do you recognize those? Do you see common limiting beliefs that keep people from creating wealth or giving themselves the opportunity to create wealth?
That's a great question. 100%. It's always a story we tell ourselves. And so if you say you can't, you're right. If you say you can, you're right. Either way, you're right. Right. So you got to tell the story that's going to make sense for your life. I'm not saying if you say, oh, I can go be a billionaire, like you just switch on a light, you're going to, but if you believe you can go do that, even if you landed at a quarter of that, you're worth 250 million, right? So I say these things to say it's a story. I could easily have played the victim. I just as easily could have been a total alcoholic, druggy person, right? Never went to college. I could have all of that. And, you know, I did have an incredible grandmother and grandfather, and aunt and uncle that just, you know, they were just there for me enough that I realized, okay, I have enough support. I could go do it. And so the story we tell ourselves is whether, and again, so this is important for all entrepreneurs. If you're an entrepreneur, regardless of how much money you're making, how many years you've been in the business, there's ebbs and flows in what we do. There's seasons of abundance and then there's seasons of droughts. Like it doesn't matter. This is just the way it is, right? And so even in those seasons of droughts, do you believe you can adapt? Do you believe you can innovate? Do you believe you can get out of it? Do you believe that there can be light at the end of this tunnel? And if then that's the belief, there's always a chance, right? Always a chance. The next part is just a little more practical. Then you got to go do it, right? I just posted something about Jalen Brunson. The New York Knicks just won the chip, which is super cool. I'm not necessarily a Knick fan, but this story about Brunson just kept coming up that I'm like, God, this kid is so amazing. And he said something in an interview and I don't think anyone caught it. And I literally wrote it on my social media, like people like that's, and then he went, and I did this was like game 2. He had this interview and I don't think anyone caught his post interview. And he said this, and I'm going to read it word for word because it's gotten like hundreds of thousands of views and comments on my social media. Like 250,000 people on this one post. You're allowed to think about the worst possible scenario, but then you have to go out and do something about it. Like just genius. It's just practical. It's just reality. It's science. Like it's okay. You know, all this positive and abundance, all good. I love it all. Right. But the reality is like, if stuff getting real, you're allowed to think about it. You're allowed to address it and say, oh, it's getting real, right? It's getting challenging. This is tough, but then go do something about it. So anyways, I say that just say, cause that's the idea of what I really believe is it's great to believe it. It's great to shoot for the stars. It's great to have that, but it's all practical, like one step in front of the other until you hit your goal.
No, I think that's huge because entrepreneurship is brutally hard. Yeah. And if it were easy, everybody would do it. And I think you're right. Everybody, and I believe in manifestation. I believe in positive self-talk. And I believe that you can see things as positive or negative. And I struggle with that because I'm a very pragmatic, you know, my wife would say I'm a very pessimistic person, but I tend to look at, you know, I'm a risk manager, right? So I tend to look at what's the risk, what's the possible outcomes of any potential situation.
Totally.
But to be an entrepreneur, if it were easy, everybody would be an entrepreneur, right? And not everybody is wired to be one. And God bless them because we need employees, right? To help our businesses run.
Someone's got to be the worker. Someone's
got to be the worker, right? But to address the difficulty that someone's facing from an entrepreneurship standpoint, to address the issue, whether it's a lawsuit, whether it's a complaint, whether it's a drought of revenue or you lost a key person, it's okay to think about it, learn from it, but it's just one foot after the next to keep moving forward. And I think that that's where I wouldn't say that, I don't have a statistic on this, but I feel like that's where a lot of people fail in entrepreneurship, especially early on, is because they take that as a defeat and not as a learning opportunity.
It's a lesson. I mean, I've done this for 23 years, specifically been an entrepreneur, never had a W-2 job. The times I learned the most is the thing that, it was the quote unquote failure or mistake or challenge. That's when I got to learn, when I was printing money, literally just waking up printing money. Like, I'm not learning anything. I'm just going to keep doing that thing until the money runs out type of idea. Right. And so, but that becomes a learning lesson, because the money does run out at some point. You can't keep the same strategy forever. And so time and time again throughout my career, I've had to I kept pouring gas on the thing that's making me money, but then something happens. The market changes, the interest rates go up, the investment turns south, whatever the thing is, it happens every time. Only 100% of the time it happens. So that's where you got to go, okay, well then how long do I keep doing the same thing before I start to deleverage my all in, pour gas on, and start to diversify? And there's some nuance there. Like, I don't know if there's a standing answer, like, oh, only do that for 2 years. Cause I don't know if it's that, but I'm more aware of that now than ever before.
One thing I see constantly, and maybe we can address this too, is people confusing income versus wealth. I mean, you've built businesses, invested in real estate, coached entrepreneurs, and generated significant revenue, right? Yeah. At what point did you realize that making money and building wealth aren't the same thing?
Man, too late, unfortunately. And so hopefully you guys aren't as late as I am, but it started in COVID, like right before COVID. So like 2019, I started to flip the switch of I met the woman who I was going to marry, who is now my wife, and we have 2 kids. And I knew it from the time I met her. And okay, I got to change. I always want to make good money, right? Because I want to afford a great lifestyle and travel and vacation, but I got to start setting some things up. And unfortunately, it took that level of maturity. I think I was 37 is when I started to think differently and started to act differently. And I kept more of the properties I was buying instead of flipping them and all those type of things. And so the idea here is I'm going to speak down at a friend's conference down in SoCal, Carlton Dennis, if you guys know who he is. He's all about tax strategy, and he's having me speak to his conference, not because I'm a tax strategist or a CPA or an accountant or any of that. It's because I think differently now that a lot of people don't think about. And it's the idea of, you need to think forward, right? What got you here won't get you there. So if you can start to already think around the curve, if you can already think over the gap to where you want to be, then you start to act differently and you start to make different choices. And in the state of uncertainty that our country is in for so many reasons, I think people who are stuck in their old ways, right? Stuck doing what always made them successful or made them rich, or doing because they're comfortable, they're the ones ultimately that are going to get caught. And I'll just use the stock market as an example. Listen, at the end of the day, the stock market has been on a decade-long run, like the longest bull run ever in stock market history ever, not even close. Did Tesla's IPO do something that has never been seen? Yes. However, what goes up must come down. And if people just are going to sit there and think that their strategy is invincible, all I'm going to do is this, then they're going to have the same kind of wake up call I had, which is, I'm not diversified. I'm only doing one strategy. I'm not doing different things. And so I'm going to get hit in the face. I'm going to get punched by Mike Tyson in the face with his famous quote. And I won't be ready for it, but you could be ready for it. You really could, right? If you just become intentional with looking around the curve, with looking to what can get me over this big gap, right? If you just think of like a Grand Canyon, how can I get from here over the Grand Canyon to the place where I want to be? It just takes some forethought, right? And so I'm speaking down there a lot about that, is because the person who historically I'll speak to me, I was big, let's go make big money, right? Kind of, just douchey flex, right? Make all the money, spend the weekends at the club, everything everyone makes fun about. The only thing I didn't do, I had a Maserati instead of a Lamborghini, right? But that was me. And for me, it was a maturity thing. I wasn't there yet. I also hadn't been smacked in the face hard enough to kind of have a wake up call, and so I did get smacked in the face, and I woke up to like, all right, that hurt a little bit. Like, I got to start thinking better. So I say that to say, if people could think about how they're building their business differently, how they're making their money and what they're doing with their money, because I'm a big believer we are all now, and I mean, unless you're a little silly with your lifestyle, we're all going to live a lot longer than we expect. A lot. Like a vast amount, right? Like I just went and did a CT scan on my entire heart, my organs. I did an MRI scan on my brain. I did a blood test. I did a metal test. I went all in, not cheap, but all in on me. Because I have 2 little kids. I want to be around to see their grandkids, right? Like my grandfather's 97. And so I say this because how the hell are most people going to afford any type of lifestyle between 70 and 100 if they don't start thinking different, right? Now, if you've sold a business and you've made 50 million, okay, those are different. Those are the unicorns. But 99% of the people are, even the entrepreneurs, are still to some level paycheck to paycheck, in the sense of like the business is running mostly because of you. And if you literally get rid of it or stop it or just say you can retire, you may not have a long enough window.
Man, there's so many things to unpack there. Great stuff, by the way. And I did a podcast not too long ago on, this is called Uncommon Wealth, right? So I had a guest on, talking about brain health and cognitive function and as you age. Yeah. Because think about it, once that goes, what's your lifestyle look like? What was it all worth if you don't have cognitive function and good brain activity as you get older? And so he was talking about the various things that can be done to make sure that you are preparing yourself. So it sounds like you do a lot of investing in your body and making sure you're aware of
creatine at all.
I don't remember the creatine conversation.
It's all over social media right now. That creatine north of 10 grams a day. I'm not a doctor. This is not medical advice. But like all these doctors are coming out like daily, north of 10 grams a day will help remove any chances of Alzheimer's, keeps your brain like top level. Anyways, I would tell people to look that up. So I was curious if you brought that up, but yeah, creatine.
No, I don't remember that conversation, but it's definitely, there's a lot in there. You should check that out, and the listeners should go back and check that out if they haven't done that yet. It's a very eye-opening, and it's not hard, right? It's just having an awareness of what needs to be done to make sure our brains are where they need to be. Yeah. So back to this whole, entrepreneur preparing themselves. When, I already know they don't spend enough time on this, but when should they start focusing on their balance sheet more than focusing on their income statement?
Yeah. I think I'm going to give the answer most people would think is yesterday. Like now, the second you hear this, like most people think gross revenue is their number, but they don't actually treat their business like a business, right? Like I have a business spreadsheet that quite literally has every single dollar cost of goods and or stuck cost of my business, right? So cost of goods is, what money goes into producing the good, right? People, resources, whatever. What is a stuck cost that I'm going to pay no matter whether the good comes out or not? So if the good doesn't come out of my warehouse, but I still have to, that's a stuck cost, right? So I have a very simple spreadsheet that I run my business off of that can say exactly how much I need to make to just like zero out, and then everything else becomes crazy. And so it's deeper than that. But today, you guys actually have to understand not just the P&L, but the real, numbers of your business, right? What are your annual, like I call it the annual sales, because it doesn't matter how much you're selling. It doesn't matter how much money you made. It matters on all the other numbers below that of cost of goods and stuck costs so that you can become profitable. Most people think, again, this goes back to life expectancy. I'm a big believer that people don't even pay themselves what they're worth as an entrepreneur, right? They're still in hustler mode to the point of they themselves sacrifice because they got to keep the business running. So Tough month. Oh, I got to cut my income by half. Really tough month. I don't pay myself this month, right? There's still enough of those people, even the people that are making seven figures, because they don't know the cost of their goods and the cost of their operation. And they just don't know it. They just keep thinking sales will cure all. Great. That's cliche. And at times that can help. But the other part is, what are your actual costs? Because if we're going to live a long life, then you, the person, need to make a lot of money, a lot. And that can't happen if you don't know what that means, if you don't know what you're running your business at, right? And so it's not just ROAS, right? Return on ad spend. It's not just one thing. It's the entire business. But, I have three different departments, right? I have a profit or three different bank accounts, and I kind of call it departments on the spreadsheet. I look at my actual profit above what I expect to pay myself. I actually look at my variable number. So every month I have a number in there for variable cost of like, oh shit, variable. I look at my taxes. I account for my taxes. All those things, vast majority of business owners don't do, right? And it's just a shame that they don't do that. There's a great book that a lot about it called Profit First, right? I mean, it's a book everyone can go get. I don't subscribe to 100% of it, but a lot of what I just said comes from that.
And there's two components there. One, I think, is the reactive mindset versus the proactive mindset, sure. Right? And so you've repositioned your thought process into proactive, but I think my next statement affords you the ability to be proactive, which is, can your business, not you specifically, but can an entrepreneur's business survive the hit by a bus test? Right? If the entrepreneur gets hit by a bus, or the business owner founder gets hit by a bus, can the business not only survive, but it continue to thrive 3, 6, 9 months? Does it afford the business owner founder the ability to take a hiatus or a sabbatical or step away from the business and it still grow? Totally. And I think all too often that's not the case. The guy has to be the guy in the middle of everything. And that's, is that ownership, or is that really a really high paid job with a really valuable asset, right? It's not something that is sustainable over the long course. And I feel like you've made that mental switch, but when does a business owner, founder, investor, when should they? And I know the answer is probably yesterday, but in reality, when do they start to make that switch to get themselves out of the day to day?
So I go round and round about this, right? So my coach, and I do believe regardless of where you're at in business, you need coaches. And I can tell you that at the highest level, they all have coaches too. And so my coach really, the first hire I believe you should ever have is an executive assistant, in a true, genuine executive assistant, not a VA, because you need someone to take all of the mess off your table, right? All of it, right? To the point of even answering your emails if you need to. And I'm not just talking about like running and getting you lunch, which might be part of it, but spreadsheets, build it. Like, you need a functional player executive assistant who understands Excel, who understands, your culture, who understands what's needed. And so before you go and start to hire these players to be your COO and all this other nonsense, which I think most businesses don't even need, you got to go get yourself an executive assistant. Here's my threshold to answer you directly. If you can't pay yourself $250,000 a year as the business owner, you can't hire. You're not at the point of scale. You're not, right? Because who in their right mind would want to make less than $250,000 a year as an entrepreneur, right? You and I both know how stressful and hard and challenging being a business owner is. It is to me, I think we're all a little bit insane. Like, we could have taken the easy route and got our W-2 job and figured out whatever our income was and lived the lifestyle based around our income and not had, 5 nights of sleepless nights out of 7 every week for the last 10 years, right? Like, you don't need to take this on. We choose to. It's our choice, right? It's a privilege that we get to solve the challenges that we face. But it's still, at the end of the day, you need to make money for you. It's your life. So to say that, I think once you make $250,000 in your pocket a year, you can go beyond just an executive assistant. I believe once you start to crack the 6 figures of actual income, you might start thinking about an executive assistant so you can just do more of what's getting you there, right? That's the idea. Even if it's a part-time executive assistant, I do believe in hiring A people. Do not go down to the C level. I don't believe in hiring your friends and in whatever the case is, or even if you've had a hire before and they've been with you from the beginning, but they're not an A player. Like, I would rather you get rid of them, which is challenging. Don't get me wrong. But again, you break into the 6 figures of your personal income, get yourself an executive assistant, maybe part-time, start relieving yourself from doing absolutely everything. So you don't have to be the chef and the cleaner and the CPA and everybody, but you still need to do all the things that is generating that revenue. You break $250,000, you might be able to, of personal income, not business revenue. So typically a strong business makes somewhere between 10 and 20% net profit. Now, some people argue, does that account for the owner's salary and distributions? Yes, in that 10 to 20%, that would be above paying the owner. Okay, above paying the owner. That's a healthy business, 10 to 20% net profit. And so when you start to break through that, you might be able to start to lean into what I would prefer is more sales, right? So I'd advise someone to like lean into sales. When you need a second in charge, which would be like a COO title, which we don't have enough time for me to go on my soapbox about titles because I believe they're all nonsense essentially. That title, which is the operations person, they run the business day to day. So the business owner, the founder can go out and do their genius, right? Now everything is on the COO to run the actual business, profitability, revenue, operations, spreadsheets, KPIs, like they are that person. I think you got to be north of 250 in your own pocket. And then that person probably can help you increase your income because the business is actually growing because of them. So that's kind of a threshold. It's a soft threshold. There's nuance to everyone's business. I get that. I just am not a big believer in business owners and entrepreneurs hiring too early.
I love that. And one of the themes that we explore on this show is the difference between creating wealth and preserving wealth. And many entrepreneurs build incredible companies, but never think about succession. Have you started to think about what succession or what happens to your business if you're not there tomorrow?
Yeah. I mean, it's why I've done real estate now for 20 years. I've stopped doing any level of single family real estate. I only do $20 to $50 million apartments. So in 2025, we acquired 8. For value of those 8 were 212 million in 2025. We've already closed on 2 this year for just shy of 60 million. We are about to close on a third, which will be another 20 million. So we'll be at 80 million this year. So we're going to get to another, give or take, $250 million yearly, probably for the next 10 to 15 years is how I'm looking at it. Now, that is my level of, I think you just used the word succession, right? Mm-hmm. And what I mean by that is I've changed from the active business model of creating cash income into a longer term. I still create income from it, but it's structured differently, into a longer term succession of life. Okay. So I'm big on this idea of life. I believe, again, I'm going to give this keynote here Wednesday night at Carlton's. I'm doing the keynote at 5 p.m. I believe most, if not all, business owners, especially small to medium size, I'm not talking about the companies that are worth 500 million and billions, whatever. They're actually doing it for the wrong reasons. I believe they think financial freedom, they think time, they think control, they think money, they think accomplishments. I believe how most, if not all, business owners should be thinking about happiness. Happiness. We are only here, to my knowledge, no one makes it out of this roller coaster called life alive. Maybe I just haven't heard of one. If we are going to go do anything, why wouldn't the focus be being happy while you do it? Or just have a happy life? And so if business owners can reframe everything around that, everything, it becomes real clear how much money you need to make. It becomes real clear where you and how you want to spend your time. Where I came up with this isn't that unique. Everyone and their mother who's a self-development guru, coach, tell me your why. Tell me your why. What's your why? Right?
Simon Sinek.
Yeah. And I love, by the way, love Simon Sinek. Don't get me wrong. But it's the same fucking answer for anyone that has kids. It's the same answer. It's your kids, right? It's your grandkids. Great. But why can't it be being happy while you're here? And I pause with that. Why are we in such a rush to create massive wealth? Why can't we just strategically create it and do it in a pace that creates more happiness than stress? So I took my 20 years of going bald, quite literally going bald, because of the level of stress with contractors and deals and all the stuff. And I said, there's just a better way. That was a great first chapter, Justin. You know, you did your thing. You got to a certain, that's a good for, but there's a better half, right? There's a better half here. And so that's why I've made that succession plan to stop going after the single family, high volatile, high validity, but profitable, into a longer term play that I can ride out in the sunset and just create happiness, right? Still going to take a lot of work. It's not easier. I'm not choosing an easy route. It's just different because it's more in alignment to your point, John, of succession, of something I can leave to the last 40 years of I'm 45 years old. If I do this for 15 years, I'll be 60. Bro, I got another 40 years. The hell? I need to be able to finance 40 years of living. 40. That's literally basically my whole life up to this point. So I say that so people can start to think about, like, I'm going to live a long time. What are you doing for succession to your own life, not your kids and grandkids, your own? And so this is what I'm giving the talk about, because I think people invest in ways that they go make money. You're a fucking baller. Sorry, I don't mean to cuss. I'm trying to slow down my cussing. You're a baller entrepreneur. You're crushing. You're making a bunch of money. Awesome. What do you do with your money so your money can work harder than you? What are you actually doing with it? And people say, oh, I bought a home, or I bought a second home. Is that a real plan? Or do you just want to, again, kind of flex? I don't know, right? Like, Miami is one of those cities that, you know, prices of homes probably will never go down ever. San Francisco, New York, Chicago, right? Miami's another one. Too many people want to be here. The politics are great. The financial upside is great, whatever. I don't mind people just buying multiple homes and maybe they turn them into long-term. But is that really a strategy for a succession of life? Because at the end of the day, let's say you sell a $2 million home and you live on $200,000 a year. You guys can do the math. That's 10 years of living. I need to fill 40. Or less, because caught in inflation. So I want people to realize, so how do you structure your business for happiness? The only thing that matters is happiness. Now, you're going to have to work hard. You're going to have to sacrifice. You're going to have to do things you don't love to do. Great example. I have a 5-year-old and a 2-year-old. Okay. I'm in the prime of my parenting. Like, oh my God, every moment is awesome. Also challenging, because 5-year-old's favorite word is no, apparently. So, you know, I'm like, oh my God. And you know what I'm going to go do? I say all this great thing about being happiness, and I'm still going to have to sacrifice. It doesn't matter. There's always some level of this. So I'm going to be gone for the next 2 weeks. I come home. I leave tomorrow morning. I'm going to go speak. It's all the way in California. So basically 2 straight days, I'm on a plane. The days are gone. I have 2 days of speaking, and then I do a keynote, and then I do 2 meetings the next day, and I fly home. So I'm gone till Friday night. I see my kids Saturday, Sunday. I fly back to my office in Phoenix Monday, Tuesday, Wednesday, Thursday, because we just hired a senior sales manager to take over sales. I want to be very involved in that process. I say all that to say that's my sacrifice. My happiness is my kids, my wives, but still, even though I know what I'm saying and I'm building for happiness, I still got to sacrifice. I still got to do things. This isn't the easy path. I'm not saying, guys, go easy. There's an easy, no, F no, there's not an easy path, right? Like, but there is, in my opinion, there is a better path than what I've done for the past 2 decades.
You said something that I want to come back to, and I don't know if you said it out of awareness or just from your feeling, but when you were talking about happiness, the first thing I was thinking was happiness is a decision. It's a choice. Like I choose to be happy. I'm going to decide to be happy. I'm not going to let this negative thing bring me out of my happiness, which is really hard to do, by the way. But embedded in that decision, there needs to be structure, right? If I choose to be happy in my business, the way that I'm going to be happy is if I have the structure in place that affords me the ability to be happy. So I'm not the guy dealing with the minutia, right? And so whether it's that executive assistant that you talked about, whether it's that operations person that you talked about, and the maturity of my business and the growth, I'm speaking generally for business owners, right? But I have to put the structures in place that allow me to be happy, right? Do you agree with that?
Yeah. I mean, listen, I don't want to speak out of two sides of my face because I'm saying you don't want to hire too early, but you do need to remove some level of the pain so that you can move faster. Okay. And so I say that just to say there's no one size fits all. Obviously, if you have a brick and mortar cupcake shop versus, you're a CPA that can essentially just be virtual all the time. You don't even need your own business. I think the answers vary slightly, right? So I think you got to audit the things that make you upset and make you frustrated. And this is why I really go, in my opinion, I think the best hire, in my coach's opinion, for most people I ask, go get a true A-player executive assistant, get an assistant. Because to me, you say, Justin, I need you to spreadsheet future models for the, Q3 and we need to know how much money we're going to spend and what is the revenue and then and you make me go do that. I'm going to be frustrated. Like I'm not going to walk out of my office a great, happy dad. Hey kids, I'm super fired up. No, that's not, I'm be like, all right. Hey kids, right? Like it'll just be, so to your point, there's some nuance to this, but the sacrifice, I'm still making the sacrifice I'm telling you, right? My happiness is my kids, but the things that I need to do right now in the season I'm in, and it may not always be, these are the sacrifices. So again, if you can't pay yourself at least a good 6-figure salary, then you can't even have an executive assistant and you got to build the spreadsheet. If you're at a 6-figure salary, then you got to look at, can you find a good executive assistant? A good executive assistant, part-time is still going to probably be $4 or $5 grand a month, right? Because you want them good. You don't want a C-level player, right? So where do you find that money? And then go do that. So to your point, John, now I'm not spreadsheeting, or now I'm not, booking appointments myself, and they're doing that. Now I'm not, does that make sense? So some nuance.
100%.
You're not wrong in saying if you're going to be happy, then you got to remove the things that you don't love. There's just a seasonality of like,
sure.
And there's an argument. We all do shit we don't love. Like even at our level, your level, my level, like I just said, like I'm traveling 2 straight weeks. I don't love it. That doesn't fire me up, but it's still the stuff you have to do.
Well, and there's a difference between delegation and abdication, right? Mm-hmm. So if I delegate as a business owner, I need to know all the intricate components of the business about what makes the business. If I abdicate, that means I have no awareness to it. I have no knowledge, no understanding. I'm just trusting someone else to handle it. And that's not a good position to be in as a business owner as well. So I think to your point, you can learn those things. You have to learn those things. You have to be knowledgeable and aware of what's going on in the business. But as soon as you realize it's not the thing that is your genius, to your words, delegate.
You gotta get rid of it
as quickly as you can.
I'm with you, dude. I agree. I'm a part of several masterminds. I run my own club called the Entrepreneur DNA, The Room. The club is a club. It is not meant to be coaching. It is because people like John and myself and so many high level business owners need access. They need resources. They need people. They need to be able to ask questions. And sometimes that's really hard to do. But I say that I bring all that up because uh, in some of these rooms, they talk about scaling a bit, in my opinion, a bit too early, right? Again, you said delegate versus abdicate. Like, I love that, right? Are you delegating or are you just choosing not to do it, right? And by choosing not to do it, you make a choice that it's not important. Yep. And you're likely going to have some sort of challenge around that. And so, yeah, I don't want to be pessimistic at all. I want everyone to go build big ass businesses and make a ton of money. They just have to understand and be clear on one thing. What are you willing to sacrifice to do it? And for some of you listening to this, it might be income. And you're waiting for the exit to make real money, right? But like, there's a company I started several years ago that like, I have not made a single dollar. And the only time I'm going to get paid is if we sell, right? But I'm aware of that. So that's my sacrifice. So like, again, there's this nuance, there's an ebb and flow. What I try to tell people is there's 5 laws of success. And I've run this 5 laws past everyone. I've interviewed a lot of incredible, successful business owners, billionaires, etc. They love these 5 laws. The first one is you decide what you want. Decide, make a decision. I want to run a business that makes $1 million a year so I can pay myself $250,000 a year. We can do it for the net, decide. But then as an asterisk or a number 1A is who do you need to be to get that, right? That is what most people don't go one layer deeper on that. Decide what you want. They don't think about what does that take from them. And if they can do that, number 1 could be the most important pillar for you, because you may not be the person that is willing to sacrifice the things that need to be sacrificed to get what you want. Number 2, commit to number 1. Decide what you want, decide who you need to be, and then commit. Again, all these are very important, but like, if you can't go through hard times and stay in the game, you're never going to win the game, right? And so I say, stay in the game long enough to win the game. Through the good, through the bad, like you got to do it. You got to commit to it. That's why you got to really decide, what do you want? Number 3 is you got to take a lot of action. You're going to mess it up a lot. You're going to throw it against the wall. It's going to be wrong. You're going to fall and trip. You got to take a lot of action and go, right? There was another, the same Jalen Brunson quote about like, you're allowed to think about the bad thing, but you got to go do something. You got to take action. Right. Number 4 is you're going to be very uncomfortable the whole way. Why? The whole way. The cliche is be comfortable being uncomfortable. That is cliche. I'm going to say it different. It's going to be uncomfortable the whole damn way. Why? Because you're going to be doing something you've never done from the time you start until the time you finish. You'll be usually going on some level of this, but going up. And that's all new. It's always new. So it's like learning to ride a bike, learning to walk, learning to swim, learning to do these things our kids do. So that's uncomfortable because it's always going to be new levels, new devils, all that. And number 5, which I hope this one makes the most impact, I hope, is going to be remove your time expectation on the result you're trying to achieve. So decide what you want. And then the 5th one is remove your time expectation on when you get what you want. I have a coach, brilliant man, Ben Newman, love him to death. He says it I said this to him on my podcast, and he said, I say something very similar. He says, long obedience in the same direction with aggressive patience. And I love that. Long obedience in the same direction with aggressive patience. And that's the game. Because if you can be patient, but be aggressive with your actions that you take, and you can be obedient to what you want, like he basically summed up my 5 laws into that one sentence, and be obedient to what you want in the same direction and keep taking action. Like, it works.
Also works with your marriage if you think about it as well.
It works in life 100%. Yeah. And then the key to that, that's a joke, but not a joke. All of us during that time, that long obedience, same direction, or, remove your time expectation for the result you want. That means we have to adapt. That means we have to innovate. It means we have to pivot. We have to change. We got to be fluid. what most business owners or even husbands, talking to you husbands, we get stuck in our ways. We get stubborn. We get on a roll and we think we got it all. I have literally been there. I've been on such a roll. I thought I couldn't do wrong. Literally, I bought into my bullshit so hard that it was by far the biggest financial crushing I've ever had, because I bought in. I was like, I'm the man. Watch me. Just ask me. Right. And so I tell you guys this to learn from that. That scar I'm wearing right there is because I couldn't wake up fast enough. That's that scar. And I hope none of you have to go through that.
One of the biggest surprises I see with business owners, founders, entrepreneurs is that many of them have a substantial net worth. Their business enterprise value sitting on their personal financial statement. It's worth a lot of money, but they have very little liquidity. So they look wealthy on paper, but accessing cash quickly can become a real major problem.
Yep.
What's your perspective on liquidity?
I would really prefer liquidity. I saw something recently. So this is where there's a blend for sure, right? So you want to set something up so you have more of the exit for when, because listen, if the money's there, most of us, including myself, don't have enough willpower control to like not splurge, not spend it a little bit, right? And so if it's in something like a balance sheet, whether it's real estate or otherwise, like a little harder to pull. But I saw something from Kevin O'Leary that I really, really appreciated. And I think his number is you need to have 5 million cash. 5 million cash. When you reach the point of 5 million cash, liquid, now is when you can go long plays, balance sheet heavy, because you have enough money to run for a decade if you needed to, right? So I really like that philosophy. In your number may be different. Maybe he's a little more excessive because he's made a whole bunch of money in his life. But there's some level like you need to have a strong liquid position. And it could be in a CD, or it should still be earning a yield. Like what I love, frankly, I'm even contemplating having my wife getting a license, like whole life policies, life insurance. I think they're brilliant. They might be one of the best financial vehicles, period.
Right? That's my business, right?
I was not aware. So there you go.
That is my business. Yeah.
So kudos to you. Let's cut that, snip that, make sure that's framed. Yeah, because of what I use mine, right? I have several policies and I have a lot of friends that sell them and whatever, so I can't give everyone business. But it's just, I think it's probably the best financial for what we're talking about, liquidity, compound effect, like all some of the standard, I don't want to say philosophical but like the age old thing we know is going to be important. I'm losing the word I want to say, but like you want to get your money compounding. I can do that in real estate. I can do it in whole life policies and some other different things. And you can pull as much money as you want. Right. And I love that. I just think it's a great thing. So yeah, I would be liquid, but you don't need to literally have it in a savings account. Throw it in your whole life policy, right? You can have 20 million liquid in your whole life policy. You just got to structure it right. Get with John, structure it right.
Beautiful. We never even talked about that. That was beautiful.
That is great. That's how much I believe in it, by the way.
You're not wrong. You're not wrong. And unfortunately, it is one of the most misunderstood financial tools that exists out there because unfortunately it's been well oversold, misrepresented, improperly structured. I mean, unfortunately anybody can get an insurance license, right? Mm-hmm. And so the barrier to entry in the industry is quite low, and the desire for them to generate a commission for themselves is quite high. Yeah. And so when you have those two things combined, unfortunately the consumer tends to get the short end of the stick most of the time. But I've got videos on that in my YouTube channel. I've got a philosophy on that. But at its core, when done the right way, when structured the right way, it is one of the best liquidity reserves that an individual can have on their balance sheet.
100%.
All right. So another question, different topic, similar in nature though. Many business owners spend decades building wealth only to discover taxes become one of their largest threats to preserving their wealth. and you're giving a talk at a tax conference that I'm interested to hear more about, but how has your perspective on taxes evolved over the years?
Well, I mean, they're not more kinder to me. At the end of the day, listen, I born and raised in California. You just kind of say, shut up and deal with it in California. Like, it is what it is. And it's one of the high, California and New York are like, just as insane. And so one of the things I've done is I moved to Florida, right? And so I save a whole bunch of taxes there because I don't have employment tax in Florida. The other way you can start to do some things.
Or state income tax.
Yeah, or state income tax. Or that's what I meant. But the other way you can do employment taxes and all this other things is how you set up your entities, right? And so
correct.
You have plenty of resources around that. I don't have to go coach people on setting up entities in a certain way with LLCs and S corps, blah, blah, blah. That being said, the reason why I love apartments as an investment vehicle is because the stage I'm at, every investment I make, I'm just going to 1031. So I keep deferring my taxes over and over and over and over and over and over again. Now, there'll be a point where the income every month, and by the way, again, because of how we invest in apartments, I have a thing called cost segregation study that we do on every single one of these apartments. So all the income I'm making for the next 15 years will essentially be tax-free. And I'm going to get it distributed every single month. Every month, I will be making my income from these apartments and I won't pay taxes on it. So over a long time, and I have a calculator that shows this, by year 15, it starts to get really fun, depending upon how much you're investing. Like really fun. Like you're at 70 grand a month, tax-free, right? And so if you guys all do the math, depending upon the state you're in and whatever else, like that's maybe earning closer to 120 to 150 a month, right?
A month,
so heavy income. So that starts to get really fun. But the reason why I love that is because now I keep rolling over every investment forever, by the way, because I'm getting my monthly distributions, right? So the reason I love, you talked earlier about my kind of like journey or how I've succession and how now I'm in apartments, because I can make a lot of money every single month. I don't have to pay taxes. And then I have a succession plan to leave to my kids, right? Because the real estate has a step up basis if I die, right? And so if I have, by year 15, I think I want to say it was like 24 million was my side of the real estate. By year 20, it doubles, by the way. So I'm at like almost 50 million. And then by year 25, I have something like 115 million. 25 years from now, I am 70. So we're clear. So I've done okay, right? And my kids will be doing okay because they get to step up that basis to like the 115 million mark. 115 million at a step up, they don't have to pay taxes on it, right? So now I'm not an accountant. So when they sell, and there's other things that of course, but they didn't have to pay the taxes between my investment of 20 million or whatever to get to 115. Does that all make sense to everybody? I hope it does. So I say all that to just say like, I am now at a place where fundamentally I shouldn't have to pay taxes, right? Ever again. And I've been there for quite some time because I'm in real estate and it just lends itself to that, right? That's why I really believe like, I don't care what you're doing in investment strategy. If you're not in real estate to some level, you're hurting yourself because it spits out cash every month. It's all tax-free and you can create a succession plan. Very similar to a whole life policy, frankly, right? And that's why I love these two vehicles. So, I don't want to pay taxes if there's always ways around it. It's literally written for us that these laws are written for business owners primarily. So let's just use what the law, literally the law book, the IRS law book says, and we run the play.
And where do you think that, by the way, great stuff. And yes, you are right on the step up in basis that your children would receive upon death, right? The one thing that's still kind of hanging out there because of the success that you're having is the estate taxes that could possibly be due that they would have to pay. And then if everything's in real estate, what's their liquidity that they would use to pay those estate taxes? Well, that's where your life insurance policies come into play, right?
Correct. Depending and then also assets so I have a great asset protection lawyer, which includes life insurance, meaning they can structure all this to protect you and to protect how you want to exit, right? So real estate, life insurance, all this can be in certain trusts, right?
Yeah.
Revocable and irrevocable. And we don't have time to go into each one of those. But depending upon what you do, I would highly encourage any of you listening, get yourself an asset protection lawyer.
Yeah.
Really describe to you, because they need to know, the genius of them is they need to know what you're trying to do. And if you can have a very clear picture of what you want, right? Law number one, what you want, they will just set it up in a way, which can include your life insurance.
And are you guys doing things in Wyoming or South Dakota with the laws of perpetuity there?
Wyoming.
Yeah. And so for the listeners, we use Wyoming as well. And he's right. You do need a great estate attorney, tax attorney, and asset protection attorney. Sometimes those can all be rolled into one person. Sometimes they're different people. But Wyoming, for those listeners that don't know, not only is it a nameless and faceless entity in Wyoming for privacy issues, but the law of perpetuity on tax deferral is 1,000 years after your last heir dies. So you have a 5-year-old and a 2-year-old. Someday they're going to have children, and those children are going to have children, and those children. Well, at some point, if the lineage of the Colby line stops, 1,000 years after that is when, in theory, those taxes would become due. So it's called the law of perpetuity. And South Dakota actually just came out a few months ago, and South Dakota has an indefinite definition now of law of perpetuity. They just don't have the nameless and faceless characteristics from a privacy standpoint that Wyoming has.
That's right.
So, dude, really cool stuff. What role do you think tax mitigation should play in overall wealth planning for these business owners?
I mean, a lot. Again, I would rather business owners actually start making real money and have to pay taxes out of the gate. I think, again, going back to like deciding what you want, of course, you can structure it in a way that you don't have to, but like, don't sacrifice your ability to actually pay your bills and to start to live a life that you want because you're so scared of paying taxes. Then just pay your damn taxes, right? But as you start to make real money, like if you're making, and I'm not an accountant, this is not financial advice, right? I always have to say that. But like, if you're making anything less than $100,000, like I don't care about anything right now. Like you're not even in the realm of the IRS, right? Like you start to breach 150 and getting into 200, you really want to be looking at like, how am I set up, right? And so again, I just think most business owners don't pay themselves what they should be paying themselves. I think you're paying yourself like $100,000 or $120,000. There's so many different ways that you can do write-offs and again, tax strategy, right? That you can make things, even travel can be a full write-off, right? If you do it in a very structured way for the, tax law. So I think it's super important. I'm literally talking at this tax strategy event, super important. But if you're just getting started, if you're like just breaking into making some money in your business, I'm not overly concerned about it.
Yeah. And I've kind of set that margin or that bar at if their tax liability is $100,000 a year or more, that's when they kind of should start having the conversation about tax mitigation strategies.
Yeah. And so what would that mean? They're making somewhere around $300,000 a year.
Yeah. Or more, right? It depends on the state that they live in, but yeah, I would say, about $300,000 a year.
Yeah. And that's why I say what I say. Like when people are getting started, most businesses can't get the founder to make $300,000 a year for quite some time.
Agreed.
Being honest,
Agreed.
Right? And so I'm not overly concerned about the founder who started 2 years or 3 years ago, because I don't think you're really sniffing that like tax liability mark yet. If you have a good tax strategist and a good accountant, I think there's just ways that you can figure that out. I don't think that's overly complicated.
Bro, this has been fantastic. And for everyone listening, if you'd like to learn more about Justin Colby, Entrepreneur DNA, his coaching programs, podcasts, and everything he's doing in the entrepreneurial space, we'll make sure we put all those links in the description below. Justin, thank you for coming on Commonwealth. And dude, I love everything that you're doing. So thank you.
Oh, bro, I appreciate that. It means the world to me, and happy to be here. And hopefully I can share a couple cool nuggets. And yeah, if you guys hear me on here, reach out, say hi, say I heard you on Uncommon Wealth. I'm happy to share whatever I got with you guys.
Thank you, brother. Appreciate it.
All right. Later.